What's up, traders? Gonna be breaking down the market today. Pretty much gonna start from the U.S. dollar. We're gonna break down the trend, see where everything at. With 24 days in the new year. Today is January 24th, 2023. And we're pretty much gonna be breaking it down from where this bearish trend started, where it originally came from. We're gonna start from the daily time frame and work our way down to see what trades we would have placed, what trades we wouldn't have placed. I already seen that it was a break of structure right here. So that was like a false breakout. But just look at this bearish trend that we're in. Boom, boom, boom. Down and down. Shot down. So everything's been bearish. So I guess because credit is at an all-time high for like the debt ratio for United States. I don't know about other countries, but for United States, we're in a lot of debt. So basically saying everybody's been just using their credit cards because people ain't been having that much money. A lot of people getting laid off. Google just laid off like 10,000 people or something like that. Amazon laid off like 15,000 people. And those like the biggest companies. So I guess they're replacing everybody with AIs and whatnot or all this other stuff. So computers, which everybody knew that was coming anyway. So they shouldn't be surprised when they're getting laid off. It's an unfortunate situation, but really can't do nothing about it. So I'm just loading up the algo. I really don't use these too many moving averages anymore. I just been using a 200 moving average. Take off these. Boom, boom. It's the 50. That's a 50 and a 10, by the way. Just put auto fib on there. Okay. This is my current setup. Gonna start just naked. So this is pretty much the US dollar value currency index. You can read. So we're just going to be breaking down this bearish trend, where we would have had trades, where we would have not have trades. And we're going to start from this false breakout in November. This was actually a good move if you caught it. So I'm starting on this time frame and I'm starting on the dollar index because like the base currency with Forex, when you on the US dollar, when you trade in US dollar pairs like USDCAD, USDDKK, USSEK, UJ, all of these currencies, the anchor of them and the base currency of them is the US dollar index. That is like just the US dollar by itself, not compared to another currency, not being it's not paired to it. It's not being like compared like how the forex market works. Like a pair is just the actual currency by itself, literally. So if you watch from the US dollar index, it basically just shows you where the US dollar's been going. And then if you switch to each pair, it'll show you exactly pretty much the same similar patterns. UCAD doesn't have as much volume and volatility as the index, so it's not going to be as much, but it's still going to be doing the same move. Like this pattern right here, you're going to see the same thing on the US dollar index. See what I mean? That bullish right there. And there it goes again. And there it goes again, more dramatic, even more because now US dollar DKK has more volume. That's why we trade it. And USSEK has not been showing that much volume lately, as much as USDDKK. So, quick way to check how much volume and how much movement is in a currency pair is use the ATR, literally. So, the ATR for USDDKK on average for the last trading day has been 3,960 pips. The last 5 trading days has been 4,781. So how I like to trade, I like to find that number divided by 5 because that's usually the big move that's throughout the day. So take that 3,960, get on your calculator and divide that by 5, and that should give you or just go on an hourly chart, and then it should automatically pop up anyway. So per 1 hour or per 5 hours is 1,200. So you will go to the daily, same thing pretty much. Just do quick math. And one day is 3,960 pips on average being moved, or the last trading day, that's what it moved. Divided by 5, 792. So you would pretty much be looking for a 700 pip move. So I will go to smaller time frames, and I'm just looking for 700 pip move. Like what gap can be filled? What liquidity zone are we looking forward to fill? I mean, it's a lot of room to the upside, but we're still in a bearish trend, so we're looking for sales right now. So we wouldn't be placing a trade yet. We'll be waiting for more confirmation. So right now, we wouldn't place a trade because our SMI, our moving, it's like crossover moving averages based on price action, and they're not telling us to place a trade pretty much because blue is over the red. And our histogram is still bearish, but it's about to flip, so it's kind of in the middle. So you pretty much be waiting for a blue bar or another big red bar, a lot more volume coming into the market. So we'll be placing the trade on this today, and we're on small time frames, and there's still like not much movement going with the trend. Mind you, the trend is bearish. So you see how these big wicks are? Okay, on the 5 minute, it doesn't look too bad, but it's still not lined up with enough price action bearish. We could see this small gap being filled right now, but what's the risk reward ratio for this little small move? Stops above. Yeah, that move wouldn't be generating us enough capital. So if we were to place a trade here, we'd be looking for that 700 pip move to the downside. So London's low was at our current price. No, London opened at 682 pretty much. No, it opened at 683, but it went all the way down and retested the level of 82,714. So we would be looking for that 82,714 being hit. That will continue in our bearish trend pretty much. So we'll be looking for that 700 pip move. Pips just mean price and points. Price and pips, same thing. So we're looking for 700 pips. We probably won't get enough volume to take that trade until like 4 in the morning, London session. So basically, when is price gonna go there? So then you could go back to your larger time frames and measure that out. So technical analysis or just analyzing the chart, this zone should be filled. London should be filled again. Uh, this was the day before, but I guess to the downside, we're gonna fill London, but the risk reward to that is not like good enough. Pretty much, is it worth our time? Is it worth risking capital for that trade? Not really, no. Especially when price action isn't on our side. You always want price action to be on your side because that's going to give you the most momentum for your trade to hit a take profit. Instead, it'll shorten your time frame that you enter trade if price action is on your side. So if price action isn't on your side, then it's like, okay, you waiting for more volume, more volume, just so it can go back to your entry. So it's like, why do that when you can just be patient and wait for the right setup and that pullback to just place that buy or that sell? But that's pretty much how I start off every trading day. Like, I start off at the daily. If we're in the bearish trend on the daily, if I'm not trying to like flip an account in a certain amount of time, if I'm not like, if it's not clear indications of a reversal or rejection of a really high level, then, or a really good level, then I'm just not gonna trade, because it's like you forcing trades and forcing positions. Risk reward ratio might not be good, or it's like you're not trading the way you've been taught to trade. You're not trading your strategy completely, so your success rate automatically is going to decrease if you're not trading your strategy exactly how you designed it. So with my strategy and my algorithm, if my whole entire system isn't telling me take a bearish signal, like send a bearish signal out to the signal group chat, then no, I'm not going to trade it at all. And this is the algorithm right here, guys, literally. Pretty much. I mean, I might use some other indicators here and there, but majority of it is the same. This should be 200. Okay. So we still bearish on the 5 minute, but we're a little oversold. Like if you look at that, look at that. That's perfect. That's a perfect trade, pretty much. What was this? Boom, boom. 600, 600 pips right there in 2 hours. That could have been our trade, or at this rejection, could have been our trade. But also, that trade was at the end of US Open. This could have been our trade. That's the 700 pip move that I was talking about. So it's going to tell you right now. Do the math again. USDCAD is probably one of the most volatile Forex pairs. Look, that's 9,000 pips in a day. In one day. Let me actually check to make sure, because that seems like an awful lot. Yeah. Okay. 9272. Just so y'all can see. 9272 divided by 5 equals 1,800 pips. So we're probably looking for 1,500 pips. Always give yourself a little elbow room to breathe. You know, when you placing trades, you'll take profit 900 and then it goes 890 pips in profit, and it starts going against you, and you don't hedge the position, or you don't catch that little pullback, or your zone just got filled on a wick really quick, and broker spread cost isn't good enough, then that should be a perfect exit for you at 890 pips. Why be greedy if you're already there, pretty much? Like, what you being greedy over, like 20 pips? You just got 890, like, you know? So that's kind of how my approach is to trading anyway. So we'll be looking for over 1,000 pips. I guess we got it right here. This volume is probably what made the range of movement so much. Like, so what I'm doing, I'm just pulling the screens up so it's easier for me to see them. Easier for me to see price action. So this is our trading zone. Since we've been in session, this is what has happened. So price went in bearish, and it's been bullish, bullish, bullish. One bearish candle, bullish, still bullish, because this wick on US Open is higher than the previous close. So previous close was here, and then the candle went bearish, then it shot bullish. So it made a higher high than this last candle. That's price action, pretty much. If the last candle is higher than the previous close, then it's like price action is actually bullish. Even though the candle color might be bearish signaling, it's still bullish because it closed higher than the previous, or yeah, the range of movement is higher. So that means it didn't respect the top. It's not a ceiling or floor. It's just, it broke the ceiling, so it can go bullish or bearish right here, this candle. But majority of this candle is like bullish, so it's like you'll be looking for the next candle to be bullish as well. But in this situation, this wick was bullish for this big bearish engulfing. This was bullish. Like the wick was higher than the last candle, the open. but it closed all the way bearish. But look at the lower low that it made. The lower low is right here. And that's literally how you measure price action. So it was bullish, closed bearish, boom, open, went all the way down. Everybody probably thought it was like, oh my God, it's a sale. It just broke lows. It did break lows right here. These were the low. This was low. But it didn't confirm. So that's why that trade wouldn't have been like the best. And the algorithm actually said the same thing. Even though we're in a bearish trend, okay, it was bearish momentum. Maybe that would have been a trade on a 5-minute if you would have saw price action, but that would have been a really quick trade. So it's like you don't want to be rushing your positions and whatnot, and you probably want some elbow room to breathe. So I probably wouldn't have placed that trade. And it was right before London session open. Maybe not. But as you can see, the next candle finished on an hour bullish. Made a lower low. Then the next candle was like it respected this level and it only went up. So you could have fibbed this bottom to this top. Boom. Smaller time frame. Show you smaller time frame should show you how accurate our fib is. And look at the trades in between the fib. That's literally how you draw a fib. So this was London low. Okay. US open high. So at Instock, we pretty much trade both sessions. So if we aren't looking at the London session, probably gonna watch the US Open US session. We don't only trade USSEC. Everything on the watch list, pretty much we trade. We trade Nasdaq. We trade gold, silver, oil, US 30, UJ. Pretty much don't trade CAD, but it's just something. It's just a good reference to look at to see where the dollar is going versus the Canadian dollar. Just something to look at because this will actually fluctuate and have like an impact on USDDKK or USDSEK or UJ. If you see, they all pretty much move similar. I'm literally flipping it back and forth just so you can see the same time frames, the same stamps, the same thing is happening. Do you get me? Same thing. It's literally. But USSEC has the most volume. USDDKK has more volume. More volume is bad for some people who aren't not disciplined traders. So pretty much that's why you need a system in place that's going to pretty much simplify your trading. You don't got to be drawing too much crazy on the chart for you to be like, okay, this is what I need to see for me to place a trade. No, you don't have to be that complicated. You can if you want. Like you can see my charts, they pretty marked up. But that's only because I'm looking for trades in between my markups. I'm trading to my markups. Like look at the 200 moving average. Look at the head and shoulders right here. Boom, boom. It's going back down. Bearish. It's going to come back here. It's going to make new lows or it's going to consolidate in this zone between 10.179 or 10.22577 in this zone, in that range. It's going to come back up, reject this 200 SMA, then shoot back down, back to the bottom. But London, after we break London lows, then we could be seeing something bearish all the way back down because the overall trend is bearish. Gotta remember that. So if you wanted to mark up this pretty much just to wrap things up, this video is getting kind of long. You can draw a trend line. That's the ceiling because we are in the zone. Just make this bigger. Okay. We could easily draw that back, so don't worry. If you was looking at that fib, you can easily just draw another fib. It's not rocket science. Use the tools at your disposal. Look at that. Yeah, it might be ugly for some people. Some people might draw better, but I don't care. This is just how I like to trade, how I like to draw up my charts. People may say I'm wrong. People may have their own predictions.